à tous.
Hello, everyone. Welcome for this team session of the Cercle des Économies. The issue is stopping the outflow of savings. This is a well-known subject since the Draghi report. The EU needs colossal investments because of the ecological transition, the refurbishment of infrastructure. A lot of capitals flows out of Europe. So now we will try to understand how we could stop the outflow of savings, what are the consequences, what alternative solutions we can find. And we are lucky because we have a panel of professionals who know the ins and outs of savings. And for this subject, first I will introduce my neighbor, Nicolas. CALCOEN, you are the General Director of Amundi. William Cadou-Chassin, your co-chairman of Eurazeo. Then we have Bank of America Securities Director Vanessa HOLTZ. Then we have the Executive Committee Chairman of Euronext, Camille BEUDIN. And we also have Sophie Patulle from France Invest. So we'll have different standpoints on savings. And I'll give the floor to my partner in crime, Bertrand Jacquilla, who will set the scene as to the macroeconomic input and insights on savings. Hello, everyone. The mics are on. Everything is fine. So the subject that we will tackle today within the framework of a debate has three paradoxes. First is that of a semantic one, because the subject of the Cercle des Économies this year is to face the reality, the clashing reality, and the second one is to stop the outflow of savings. So the general topic of the rencontre is we talk about a clash, about a shock. That means that it is fast, that it is violent, that it has arrived recently, but the topic that we talk about today is actually a secular one, an old one in Europe. So there's a paradox here in the wording of our topic and the general topic of the conference of this edition. The second paradox is economic, because there's an abundance. I'm not going to give figures because we don't have the same figures. And according to the state report or the Draghi report, there's always a discrepancy. But there's a lot of savings in France and Europe. And these savings have difficulties in investing in income-generating investments. Because first there's the state that is trying to find risk-free investments, because the French people are actually risk-averse. That's the first paradox. There was a lot of people saying that they would actually jump on their seats, keeping on talking about Europe, Europe, and Europe, chanting that name. And there's a difference between France and Europe, and this problem was mentioned in the Draghi report and the state report that we talk about in all commissions right now. But it is quite surprising that two banks whose nationality is that of countries having forged the group of 6 members of the Commerzbank and Unicredit and an Italian bank have unsurmountable difficulties to overcome to be able to merge. So the reason of this paradox is that of behaviors. We are lagging behind in the banking world on securitization. Despite the efforts of Euronext, we have a consolidation of stock exchanges that is not completed yet. It is still an ongoing process, and so we have a wide array of factors that are such that Europe cannot be built, and the elites talk about it so much. Thank you, Bertrand. Bertrand was mentioning the challenges, the regulatory and political challenges ahead of us. Sophie Pature, you represent the private sector, the non-public world. Can you talk about the challenges of the non-listed companies? I have two convictions that I would like to share with you. The first of which is that we have a straightforward state of play, as was recalled earlier. The Draghi report, for instance, they all say what we need to do. We all know what we need to do. We have to invest significantly. It's the right timing, and it's actually time is of the essence. We need to invest to build a European future. And this will be done thanks to companies. And in France and in Europe, we have a lot of companies that are non-listed, that are startups, SMEs, that are ETIs, and that are very vibrant and performant. And their performance is actually quite interesting and laudable. So it is urgent to act right now. And we have some weaknesses. They were recalled earlier. But I would like to say that we have assets, we have savings. We need to make it attractive, and we need to make sure that it is attractive to invest here in Europe and France, to invest in our country, but also in our continent, because we have the obligation to build if we don't want to be colonized. We need to rely on our companies and those that are capable to bring about the future fundings that they need. I'm going to talk about what I know. That means 450 companies in terms of venture capital. That's 450 management companies that invest every year 50 billion euros over the long term in SMEs and in companies at large, in all sectors, all across the board. I would surprise you by saying that the first sector where there's venture capital invested is in industry, in SMEs that are in all our regions, with a spectrum of activity which is quite wide. But we need to help them to innovate and to face the challenges of development, of digital development. We have to face ecological transition issues. We need to benefit from long-term resources to do so. So what would I put there in the pot upstream? We talk about the short circuit. So when I talk about venture capital, it's the combination of savings and companies, because to whom you entrust your money, your savings, these management companies, well, there are teams of professionals that will invest in SMEs, and they will make money available, your savings, but also experience and expertise. Experience and expertise that will help them to transform and to bring about also leaders so as to boost the development. And for this, we need investment, because we know that when we have own equities, this is how we have more visibility on your financial resources. This is where you can be more aggressive on the market, and we know that we need to be aggressive today. There's an important point to highlight. We have two very positive elements. France is very much ahead in that field because it started earlier, because historically they had means that were less adapted. We talk about France, Germany, Spain together, and Italy. We talk about 10,500 companies. To give you an idea, it's 2.4 million employees we're talking about. So all in your family, you have someone working in a company where you have the presence of venture capital. And then we talk about yields that are actually not to be shameful when being compared with American yields. And we have two double-digit yields. just like in the US. So we have financial yields that are equivalent to that we can find in the US. And we have a strong incentive to build the future of tomorrow, thanks to our companies, our entrepreneurs. And I'm deeply convinced of that, because this is the best means to succeed and to implement and to face all the challenges ahead of us. So we can do that with our entrepreneurs all together. Sophie, thank you. So your message is to say there's no reason to look for yield in the US, right? Yes, you're right. This is exactly what I'm saying. Yeah, you can have yield in Europe. You can keep your savings in Europe. You don't need, making risky investments in the US is actually a fallacy. It's the wrong attractive investment. So what about you? You're talking about stock exchange platforms. We often talk about capitalization when we compare between the US and Europe. We think that Europe is weaker. Obviously, it's also related to the subject of savings and innovation. So according to you, what are the solutions? How can we catch up on our delays? And well, I would like to follow up on the needs to fund some sectors. And what was said, we need a massive inflow of capital to fund the acquisition of weapons and to fund the ecological transition. On the continent, we save a lot. We have a saving rate which is very high, 15 to 18% according to the countries in Europe. And that means that in Europe, we don't need to import the savings of others as opposed to the Americans to fund our economy and our needs. This is really extremely important. You talked about the paradox of savings today that is invested not via productive tools for the economy, but that is invested in monetary funds, in fixed rate funds, in cryptocurrencies that doesn't bring anything to the economy, and on the sideline in American equities. Now I would like to go back to the solutions to be brought to this paradox. The first subject is that we need a long-term savings. But in Europe, we have precautionary savings, as we say. In Europe, people do not contribute to their retirement via retirement funds. But in the US, to guarantee their retirement, they invest each month. They contribute to retirement funds, and that actually boosts the American economy and gives more equities to the economy. This is a reality that will need to be imposed on Europe if we want to be able to fund innovation and to have equities for SMEs, to have equities for the ETI, to fund a digital transition. We need to gear savings toward retirement funds and the company's equities. There's a difference also for asset managers. We have among our panelists, we have a discrepancy of 1 to 10. Nicolas, it doesn't mean that Nicolas is less good than a BlackRock colleague in the US. It's just because they're sitting on savings highly invested in this capitalization that is necessary to fund the retirement. And then there's another subject, is our risk propensity, because there's no financial instrument that would yield more than equity investment, and we often tend to forget it. And sometimes there's actually a psychological effect when you speak with your banker or your asset manager in your agency. We show you different funds. Do you want the riskier fund, but careful, you could lose everything, or do you want a fund that would guarantee your savings where there's less risk, but that would bring you more? And generally, they would opt for the safer option. And they say that I don't want to lose anything. So there's a psychological aspect to that. And this is a subject on which we have to work to revisit our risk propensity. What yields more is actually the investment in equity, as I recall. And something else on which I would like to insist, we see that there's a need to defragment markets. We need to simplify access to financial markets that could be seen as too complex. There's just so many regimes in so many countries at once there's a willingness from the European Commission to move forward on that subject. The Commissioner CALCOEN is actually doing a lot of work on this. We have to have a coalition of willing countries if we can't find a political consensus to move forward on these subjects. So this is an extremely important point. There's an initiative, the Finance Europe certification label, where you can prompt investments in equities that are European equities and securities. We need to have different savings instruments to make it more attractive from a tax point of view and to mainstream them and scale them up at the European level. At Euronext, we take our share because beyond the initiatives of the Commission, the member states that can act on taxation, we have to create groups of private stakeholders to move forward on the subject of investment. Euronext is doing consolidation of stock exchanges. We have 7 of them right now that create a pool of liquidity to attract a pool of investors, and that they will be able to invest in ethical trading initiatives and in SMEs, and there are 12 million euros that are exchanged every year. That's actually a large part of what is done in London. We have to continue with private group initiatives to simplify access to listed companies, equities, and we want to have a single memorandum for IPOs. We also have an infrastructure for markets that is being ongoing as well, and that's a good thing because there's a subject of a European market fragmentation, and we need to solve this market fragmentation issue to simplify everything, to streamline everything. Thank you. Thank you, Camille. So what about your preconization, your recommendation? So more capitalization for retirement purposes to fight against splintered European markets and stock exchange consolidation. So this is a structural problem that we need to address from either side of the Atlantic. What about you? You want to talk about, you say that Europe is lagging behind on a subject that is securitization. It can be a technical subject, but it embraces a lot of issues relating to savings. Yes, securitization is not a bad word. Everybody thinks that this is very technical, but it's actually easy peasy. So I totally agree with what was said before. Europe is very wealthy. We have 35 billion of savings in Europe. That's twofold the growth product of savings, and the fact that it's underused, and sometimes it is also flowing out. Sometimes it flows out of Europe, 1/3 actually. There's a lot of savings staying in Europe, however, but often it is geared towards the US, and it's not because the American market is more accessible, less rigid, and more liquid. So adds up to it the risk propensity. European investors are very much risk adverse. Why? Because, as we said earlier, they want secure, liquid, guaranteed financial investments. So they opt for guarantee funds in euro or regulated savings regimes, or they want even 0% yield funds. And if there's no profit, then they don't fund the real economy. They don't go back to the industries to fund Europe's economy. So there's a way to channel these savings. It's securitization. In crystal clear terms, it's the grouping of banking loans that would be real estate loans, consumption loans, loans to SMEs that would be transformed into financial securities offered to investors. Concretely, all this grouping of loans are structured in a structure that is governed by legislation that is well prescribed. The investors have access to these financial securities. There's a financial yield, and all these savings that have been taken in this structured investment would fund the real economy, the actual economy. So the banks are freed because banks have more capital to fund and to grant loans to the real economy. Investors have access to diversified instruments and products that are established according to their risk propensity. And these are tools that can actually fund real and actual economy. This is securitization. It's quite straightforward, but that releases a lot of capital to fund the real economy. So yes, we're lagging behind us to the US. Securitization is $12,000 billion. 72% of loans are securitized. However, here it's 17 times less in Europe. We don't securitize, and everything depends on the banks to grant loans to SMEs and so on, but also to fund infrastructures, but also energy transition. So when we release these equities, we can actually fund actual economy, real economy. But there's a lot of hurdles in Europe, regulatory hurdles. We need to streamline this. We'll need to harmonize this. We need to take these capital markets that are really splintered and fragmented in Europe to fund this real economy. So all these hurdles are very significant. Europe has the money, has savings. However, it needs to have the right tools to raise that money and to mobilize it. Thank you. So after your three speeches, we can see that there are avenues for improvement. There are technical solutions available. That's the subject matter of our roundtable, to stop the outflow of savings. But William, we talked together before this roundtable, and you said that's not the subject matter. What about these 300 billion? What is your approach to the subject?
It is a subject, but it's the tree that's hiding the forest. So a lot has been said, and it's all quite right. Europe is a continent where there's a lot of savings due to the size of the GDP, 35 billion. But it comes from a disease. Europe has a level of investment compared to GDP, which is 200% less than the States, and a level of savings that is very high. So people do favor precaution over investment. If we take the second aspect with this abundance, which is the very poor allocation of savings, and in particular the fact that it's not directed to the productive economy, which is the forest, rather than seeing whether it goes abroad. So we're looking at the scales that are very different from 300 billion. If we had the structure of savings that there is in the United States, meaning more long-term savings, more on equity, less on monetary, on euro funds and life insurance, etc., and regulated funds, to take the example of France. The Noyer report, which is the third important report on this point, says we would shift 8,000 million euros to productive investment. Compared to what the Draghi report has said, it is amazing. It's 350 billion euros in the annual flow. So that's the real topic. How do we redirect towards the real productive economy? Because all of this goes hand in hand with two subjects that are key and which are somewhat taboo. The first is that we are impoverishing European citizens. And we are collectively impoverishing them by privileging states and taxes, which are very ineffective in terms of savings. And the Noyer report gives a very cruel statistic. If you're a French person over 10 years, with the structure of savings as it stands today, with euro funds, savings accounts, you're losing 13% per year over 10 years. If you invest in American equity, and that's like the case of most Americans in their pension funds, you gain 140%. And if you invest in the French stock exchange, you will have gained 80%. So we create negative effects for European citizens. So that's what is important to recall. Not only we're not funding our economy, but we're impoverishing them. And the second taboo is that it's not only true that the savings are going to the United States, for example. It funds debt products in the States via insurers' results. And European equity is funded by American and English, for example. So we're attracting capital, which means that there is a yield, and that was said regarding equity, but it was also on the listed stock exchanges. So there's a question of sovereignty here as well. You are a wonderful European startup that at one point becomes a European unicorn. And at the beginning of your career, you are funded at 50–60% by Europeans. And when you look at more ambitious levels of funding, it's only 18% that is funded by Europeans. So you mustn't be surprised that at one point these companies that have global jobs, you're looking at artificial intelligence, these are global professions, must wonder about listing in the United States or American headquarters because their stakeholders are mostly American. So that taboo is essential. So what can we do? A lot has been said, and I agree in the fact that today there is a movement in Europe with the findings that are there and proposals that are on the table. 2 weeks ago, there was a proposal from the European Commission on listings, and then in March from the European Commission on savings. So maybe a few points. The first point is that we can let things go without loosen things up without harming the system with a few very constraining regulations for those that allocate savings. So that is insurers. So 2%, it represents 2% of their results, and in the States it's 5%. Just look at France. If you take 1% of the Euro funds, it's 20 billion. So each year, Europe raises 25 billion, not more, to fund innovation, and that's venture capital. So 1% of French Europeans would fund the equivalent of a European annual venture capital. Of course, we can loosen up a few rules on pension funds when they exist, but the fact is that they don't really exist. And when they do exist, we have markets that work very well with a continuum of liquidity and non-liquidity, which is very effective. One example in Europe is Sweden. Second point, there is access of private individuals to savings. And there are a lot of ideas on the table which go through European labels, European savings products. It's not the subject for me. It's an important point which would allow comparability and visibility and competition. But the real question here is domestic, and this brings us back to what Bertrand was saying on the obstacles of pan-European approach. The question is domestic fiscality. If the domestic fiscality favors products that are frozen and don't pay back to fund the state debt, then we won't be directed to the productive economy, and then there are threshold effects and cultural problems. But the private individual savings must be redirected. And the third point is like listing is very important, not only to boost the market, but if you have more deposits that come out of the bank's results to be invested in productive industry, all of this must be refinanced. So there needs to be the creation of big European players. In banks, there are obstacles. On markets, also, there are obstacles. And among asset managers, I'm sitting next to one of the biggest European asset managers. And as it was said, it's just a fraction of the size with regard to the American majors. So there's a consolidation. And I know that you're working hard on that. So good luck. Thank you, William. So, Nicolas, it's not easy to take the floor last. We've already had an amazing insight into most of the topics. But, you know, as a representative of Amundi, you have a very particular role, and in particular the management of assets, which is very important in the management of the flow of investment. So, for you, what do you think needs to be done? What would you expect from the public authorities so that these European savings remain in Europe, and that they what is the role of asset managers? So indeed, a lot has been done. I think practically everything has been said, and I'm very aligned with, in particular, with what William has just said. Just quickly on the finding that I, share. And you quoted the Noé report that I was lucky enough to contribute to. I think that it's important to remember that we do have savings from private individuals that are very abundant in Europe. I say private individuals because in countries, unfortunately, such as ours, it is a little bit compensated by public savings, which is lacking. And Europe altogether has net savings and invests outside, but for France, that's not the case. So generally speaking, our savings are very abundant. And the question is, first of all, that of allocation. And that was, said by everybody, the allocation towards short-term products, deposits, guaranteed products, which, we can't completely destigmatize. When we leave money in the bank, it does use it. It invests. It lends money to companies. But for many reasons, including regulations, they cannot really invest in long-term products, in shares or private assets. So that is a problem. And regarding the export of European savings, indeed, the paradox is that we invest in debt products, as you said, and we fund the American state, while the American pension funds are funding our companies. And that raises a question of sovereignty. So, once we've said that, the main point is, how can we correct that? How can we ensure that in the interest of our companies and the funding of the economy, but as you said, also in the interest of investors themselves, if they have long-term savings and when they save, it's often for long-term objectives, including retirement. So how do we correct this? And I think that from that point of view, we must really have a very global approach and set off from the root of the subject. When we talk about private individuals, we talk a lot about financial education and risk aversion. But if the private investors have an attitude with regard to risk which is not really coherent with their long-term interest, that is to be understood within general framework. The first is fiscality, as you said, the products, the efficiency, which is somewhat the wrong way round in certain of European countries, including France, even though, thanks to recent evolutions, the PAC law and the development of retirement savings is a real success. I think there's about 120 million euros after 5 years, and then the continuation of this trend with the other laws, but I don't think we're at the end of our reflection. So I think that we need to go beyond in the design of products and in aligning fiscality with the horizon and the risk profile of the products. The second element, and because there's a shift in paradigm in the approach that regulators, public authorities and distributors and savings producers have in protecting consumers. There have been a large number of new directions and regulations, and it's very important, that have encouraged the protection of investors and that they understand the risks they're taking. But if we put side by side all of these regulations and if we put ourselves in the shoes of an investor and an advisor, it has become a lot simpler to direct savings to deposits, to traditional euro savings, and very tricky to recommend long-term products. And I think that this is a paradigm that we no doubt need to balance out. And the last dimension, and this was said by Camille, is the importance of having more open markets that allow money to circulate faster, and also to consolidate European players who you were kind enough to mention Amundi, but whether it be in the asset management, finance or private players, we do have very strong European players, and we can see this. And they're tending to invest in proportion far more in European assets than in the American competition. So to come back to the topic of the export of savings, if we have fiscality that is turned around, and if the public authorities, through tax incentives, encourage and help long-term savings, we must also use this public money to favor Europe with a minimum of Europe assets. That's the meaning of the Finance Europe label that a certain number of European players are considering. And that seems to be just common sense. Thank you, Nicolas. I wanted to react to what William and Nicolas were saying about fiscality. Today we have tax systems that are directed towards non-productive savings and not the funding of real economy and shares. The fact is that when you put yourselves in the shoes of Amundi and you have to think about next year's budget and you must raise hundreds of millions of euros on the market, you always raise the question, is it the right way to pinpoint tax incentives that are directed towards fixed-rate products? In France, we haven't solved the problem of the deficit, and so we will always have a dilemma between financing shares where there's incentive, tax incentives, or financing the public debt. And so we need to manage the public debt so that we can direct tax incentives towards the productive economy. That was the question I wanted to ask. Do you think that France, for example, can move towards a system of retirement by capitalization? Or can we take this risk with so much national debt? Can the state take this risk? Well, here you're asking a question that goes well beyond our scope, but I think that social expenditure in France is substantially higher than in the rest of Europe. I'm not talking about welfare states, but I'm talking about countries where we're reasonably generous in the retirement or health systems. So reducing the share of social expenditure that is directed towards retirement and substitute it with the overabundant savings of Europeans that would invest in long-term products and therefore also the productive economy of companies with GDP and productive effects that are induced. Yes, I do think that it is urgent to do this. Camille was talking about crypto currency. I don't know if anybody wants to react to that. And Camille, you were saying that this is a topic that was of concern to you, to see savings directed towards cryptocurrency. So among the other speakers, do you share this concern, or do you think that it's just anecdotal? Vanessa, is this a topic that you're monitoring? Yes, this is a subject that we're monitoring. Yes, cryptocurrency, if we talk about standardized cryptocurrency, and there are European standards that are starting to look at cryptocurrency and the digitalization of the Europe. That's something that we can see. But for the time being, with regard to the funding of the global economy, it is a relatively low share, and we need a very clear framework in order to establish the regulatory and legislative framework in order to make things more secure. But yes, it is a subject that we're talking about, but with a very secure framework. But it's not yet the main subject to redirect savings to the real economy. I think that there is an essential aspect here in terms of security. And what was developed recently, above all, in listings is a standardization and a transparency. So we often compare some products to the crisis of 2008 in the United States. We're very far from that. So it's also we must also carry out this education on the fact that the security aspect is taken into account, transparency as well. The framework is very different because that was it then in 2008. The results of the financial establishments are far more stable. And we must use this regulatory framework to say that we can mobilize these savings. And yes, euro and digitalization is a very important factor. So but the regulation is in the right timing. There's not a distortion of saving flows. No, I think that we need to move ahead. It's difficult because Europe is quite slow. I can't talk about good timing, but it's one of the topics, and there are a lot of other topics to be seen first in order to fund the real economy. Thank you very much. I'm not going to monopolize the floor. Do you have any questions? We're going to begin with the gentleman there who raised his hand first, and then you. We're going to take several questions at the same time, because please ask quick, short, clear questions. And we'll take them all at the same time. Hello, William from the University of Bordeaux. I have a simple question. Can we create a model where we can combine the model of social security and retirement by capitalization? Because it could be contradictory, I believe. That's an amazing question. It's going to be difficult to answer this in 2 minutes. The gentleman there. Hello, I'm Fabrice Romain. I'm an engineer in electronics. Sophie Pathieu talked about non-listed investment. There is France Invest. I wanted to know whether these investments were open to private individuals or whether this was just via institutional players. Philippe, I would like to dispute something. You're talking about funded pension schemes. I bet the flow at the outset would be quite marginal. I don't see how this can, meet what was set down in the Draghi report. Second thing about risk-taking, you were quite right when you underlined the fact that risk-taking in Europe was not very significant, that there is precautionary savings linked to the problem of retirement. So all of that is linked. But there's another factor that you have not mentioned, and which is very important in Europe and less important to the United States, is the fact that the pay of back on households when they take a risk is far less significant than the payback for professionals. And therefore, the incentive of taking risks is far less interesting in Europe due to this. Thank you, Philippe. Sophie, very quickly. Simple question, simple answer. Thank you for this simple but very important question. So yes, indeed, venture capital is open to savers. A lot of work has been done in this direction, and I was saying we invest 50 million and we raise 50 million savings. We raised 2.6 million last year via the individual, private individuals, and in particular through life insurance and special savings schemes. And those are part of the main directions of our action, France Invest, to make accessible to private individuals, to make venture capital available to them. I don't want to do any advertising, but I would like to say that among the players that do distribute to private individuals, Patrick Bouillon, etc. But regarding the question on capitalization, I'm not sure that we disagree with you, sir, at all. And the fact that savings will not create big flows. But today, there is no contradiction. There is a system of distribution retirement which has reached its limits. It's no longer an insurance system. It's funded by public expenditure. We won't come back over what was said, but it does, show the general inefficiency of the system. So the idea is to have savings that are directed specifically towards retirement savings with tax incentives, and generally that's the deductibility from your taxes for categories of populations that don't pay income tax, and with a closing of the funds. So if you look at what exists, it works. The PER savings plan with the PACT works, but today, what is retirement by capitalization? It's the Euro funds and life insurance. And the tax incentive is over 8 years, and yet people do invest in this product that is not very interesting. And the yield is 3.5%. 10 seconds, just a few seconds. We also have another example, and that is the Dutch retirement reform, which really develops this has moved towards a funded pension system. Sorry, we've lost the sound. I apologize. So we have examples, and these are very important examples that we must follow. So it's not a contradiction, but it's a redirection which is necessary for the future. Nicolas, 20 seconds to answer Philippe Trenant, and then Bertrand. You have your 3 minutes for the conclusion. So I think the question was about yields of the offers made to institutionals and private individuals. I don't agree with you. With comparable expertise and comparable products, the yields are very close. It's just that there are products that target retail with higher costs that are related to the distribution cost to indirectly gain access to thousands of distributors. If at the end of the day institutionals invest in products that give a higher yield than retail, it's first and foremost mainly a question of exposure and composition of the savings allocations. And this is the challenge of everything that we're talking about, in the interest, of course, of companies and the needs of production that we're trying to fund. And above all, when private individuals invest in the long term, we need to ensure that they can have exposure to asset classes that are a little bit more risky, but in the long term give a higher yield. And these are shares or private equity. I'm sorry for everybody who wanted to ask questions, but we're at the end of the round table, and Bertrand must now conclude our debates. I'm sorry, but afterwards you'll be able to chat with them when we get off the stage. Yeah, so this is... It's the glass half full, the glass half empty. I think that there was a certain amount of optimism among all of you. There is a subject that, one word that was not used, is that of financial education. Not that long ago, a dozen days ago, I was with friends in Burgundy, and there was one of them was a very well-known wine producer, and the other had a monopoly in France of the manufacturing of umbrellas and sunshades. So they're both getting on in years, and both of them were saying, I don't want to invest in the stock exchange. One, because he'd had an unfortunate experience after his first course in a management school. He bought shares and he went bankrupt, and the other by personal conviction. And I think the theme of education, to encourage French people to go towards more risky investments and assets, would allow us to respond better to the recommendation of the Draghi report. Thank you very much, Bertrand, for these closing words. Thank you to all five of you. And Bertrand's right. It was a very optimistic, and that's important this morning. We can see that, you know, there are lots of questions, and well done, because you've really given us some directions and solutions. Thank you very much for your very clear explanations.